Welcome to The Explainer. Today, we're diving into a pretty surprising surge in the housing market and trying to figure out the hidden forces that are making it all happen. So, something pretty big is happening in the housing market right now. We're talking December 2025, and demand is, well, it's really heating up. The number of people applying for mortgages is hitting a level we haven't seen in 3 full years. This isn't just a small bump, it's a major shift. And you might think, oh, that's easy. Mortgage rates went down. And sure, that's part of it, but it is definitely not the whole story. The real reason, the actual trigger, is a much less obvious factor that has been quietly but totally changing the game. Okay, so let's get into this hidden driver. It's a concept that financial experts call the mortgage spread. And trust me, if you want to understand what's really going on with housing right now, you have to understand this. You know, the easiest way to think about the mortgage spread is kind of like a retail markup. Lenders have a wholesale cost for the money they loan out, and the final mortgage rate is the retail price you pay. That difference, that markup, that's the spread. And when that spread shrinks, your final rate can drop, even if the lender's wholesale cost hasn't really changed much at all. And here's the real kicker. That big drop in mortgage rates that got everybody's attention, it simply would not have been possible without this spread getting better first. It was the absolute first domino that had to fall to get everything else moving. So that improvement, that first domino, leads us to the next clue in the story. And this one is a number, a very specific number that seems to act like a powerful tipping point for the entire market. Yup, there it is, 6.64%. I mean, the data from the last few years is just incredibly clear about this. Whenever the average mortgage rate drops below this exact threshold, buyer activity doesn't just, creep up a little. It really, really takes off. Now, we've seen this happen before, right? Rates have dipped below this level in the past, but they can never seem to stay there long enough to build any real momentum. It was like a tease for homebuyers. They'd get a quick glimpse of affordability, and then, poof, it was gone. This time, though, it's a different story. We didn't just dip below that magic number for a second. We've actually managed to hold rates down for a good, sustained chunk of time. And the results of that stability, they are becoming crystal clear in the data. All right, let's get to the proof. We're going to look at the data from the last 18 weeks because this is where the story really gets interesting. I mean, just look at this. It is a night and day difference. On the one hand, when rates were above that 6.64% line, the market just couldn't get going. It was stuck. But the moment we crossed below that threshold and stayed there, demand took off, kicking off the best 18-week stretch of the entire year. And these numbers tell such a powerful story. For almost 5 months straight, we had 11 weeks where demand went up, compared to only 7 where it went down. But here's the really impressive part. For 18 straight weeks, we've seen double-digit growth compared to the same week last year. That's not just a blip, that is a real trend. And this chart just perfectly illustrates that momentum. Think of it this way. For every 7 steps back the market took, it took 11 steps forward. This positive momentum has been consistently winning out, building more and more confidence week after week. So let's step back. What's the big takeaway from all this? What does this actually mean for the housing market and, for anyone out there who's even thinking about buying a home? It really boils down to this simple chain reaction. First, the mortgage spreads got better. That allowed rates to finally drop below that key trigger, 6.64%. And then, crucially, staying below that line over time is what gave buyers the confidence to jump back into the market, creating the real lasting momentum we're seeing today. Which, of course, leaves us with this final massive question. We've seen the formula for success, stable spreads and rates below that magic number. So, if those conditions hold, are we looking at a genuine turning point for the housing market? Is this surge in demand actually here to stay?